So I thought I'd put together a bit of a video taking things I've learned over the last, 3 or 4 years, and just make some simple assertions, I guess, about the way that markets move. You can see I've already put a strong rise up and then this zigzag pattern back down again, and people would consider this a trend here. In fact, I know many people would put a line along here and consider this to be a trend, and when this line was broken upwards, anytime price broke out of this line, they'd consider the trend change, but that's not actually the way things work. A trend change happens when a series of lower highs, like these are lower highs here, obviously, gets broken upwards. And for that to happen, in the case of this downtrend, this is the actual point that you would look to get to see broken, because each of these drops represents sell orders, of course, because the only thing that exists in the market are buys and sells of apples or apple or copper or futures or whatever it is. It's just buys and sells. You can dress it up in all manner of ways, but that's really all that's happening. So I'm using this software because it's got a reasonable drawing package, but it's still a bit clunky. So apologies if it's annoying at times, because it's annoying for me too. So anyway, you want to see this broken upwards. So really you want to see, if you're looking to buy, you want to see an uptrend starting. So you would like to see price come up above this point here. So when we see that, we can say, oh look, there's a change in sentiment, or at the very least, any buy orders that were here, sell orders that were here that pushed price down no longer exist. Anyone who was selling here, well, those orders have been taken and prices continued upwards. A lot of people will start buying here because this is breaking out. It's a breakout. You'll get breakout buyers. And you might hear about people getting, doesn't matter what the expression is, but anyway, you got breakout buyers here, and people might have gone short here. They'll have put their stops above this, and those stops have just been taken out by the market going higher as well. Now, it can easily continue up from here, but buying there is quite a dangerous thing to do, because it can also quite easily come back down, and your risk reward on a trade there is not so great. So what people will do, and this is one of the reasons why there are such important points in the market, is they'll look at the place where the decision was made, if you like, to make this break. And there's actually a small decision in here, but the source where the power came from to do that was down here. And so you want to look down here for reasons to buy into the market, because if it comes back down here, that's what many people will be trying to do, and people who are smart with big money, and you want to follow what they're doing. So rather than buying up there and getting caught out, because if it comes back down like this, it might take your stops out or whatever else, this is the point really where you want to enter the market, because it's shown it's going higher, and it's come back down to this point that caused the break, essentially, and also your risk to reward here is much better than trying to buy in up there and having your stop here, or even your stop down there, because what can also happen is that price can continue down, and if it comes up from here like this, if it comes up there, what it's done is it's gone to see the buy orders that are sat back here, because this is a very strong move up as well. So there's a good chance that there's some buy orders in there. So what you have there, this point here, is a fake out. So it's faked out anyone who went long here. They saw the break here, so they've gone long, and maybe they had their stop down here, and the market's just taken them out, and it's just more grist to the mill, I guess. Cannon fodder, if you like, and you'll see it rise up. And I've drawn that rather haphazardly, actually, but the place you'd be looking for a target there would be, can I draw a box from that? I don't actually see it. I haven't used this software in so long, but like around here. So this peak here is where the next set of sell orders would be sitting. So that's kind of your target for any buys you take down here. And the chart that I put up in oil recently was exactly that, and the suggestion I had in Gulf Keystone recently was pretty much exactly that too. But there are things you have to be careful of, because I mentioned this was a fake out here if price goes up. Well, this also here can be a fake out. It can be a fake out of this. So if this is really, the market wants to keep going down and it comes up beyond this and drops anyway, then you could say that this has faked out this point here, and this is actually the true selling point. So what you can often find is this point here becomes significant when price comes back to it, and you might find that it does one of these kind of things where it comes here and then drops off further, or it might only come back down to this area. And in fact, and this is why you have to take profits quite soon and cover your positions and make sure you protect your capital, because it might just come back down to here, which is exactly the same thing again in reverse. Sorry, I'm maybe going quick here, but exactly the same thing in reverse as this break here. So we've got another break down there and it's come back, and this is the true buying point, that's the true selling point, and you see it will continue to range here, and price only ever trends upwards, downwards, and ranges, and there's not really much in between. And if you look at each of these points here, and whatever, this point on a smaller time frame, then you might find something like this where it comes up and it does this kind of thing. So it's already shown that it's gone up and it's ranged here, and then it comes down like this, comes up and drops, and you have a pretty important decision point there. This is all about decisions. A decision point here where it's decided to go down, and often these points here are just tests, retests of this decision up there. So in the case of these 2 points here, perhaps what really would have happened was this would come up and down a bit further, and it's tested this, which on a smaller time frame sits inside here. I apologize if that's not as clear as it could be, but I'm not putting a huge amount of time into this. So what you have in the market are decision points, fakes, and retests of areas that have seen important action before. So what you can also see is price comes like this, comes back down to here, and off it goes again. I'm going to take this out, take all this stuff away. Okay, and so this becomes an extremely important point here, right in there, where it's failed, if you like, failed to come back downwards. So it's made this break, broken up, come down, failed, and that's also an important point to look out for in the markets. If this point has, whoops, I just deleted that. So if this point here didn't come all the way back down into where there was strong buying here, it's quite likely it's going to do so in the future. So all those who have stops under there, because they're thinking, oh, series of higher lows and it's going to keep on going upwards, they can get stopped out when it comes back down like this, to then subsequently test where the decision was made here, where the true demand is. And this quite often is in line with this point here. So you get this low, high, lower, low, higher, high, higher, high, and it comes back down. It might have done it here, come back down, or it can do it here. So this is a safe place to have your stop, and down here is a super safe place. But that's kind of what's happening. And this shape that I've just made here, now some people might consider this to be a head and shoulders. Head and shoulders really looks like, I don't trade head and shoulders, I think they're nonsense. A head and shoulders would look like this, and then someone's going to say, oh right, I'm going to go along here, look, there's the one shoulder, there's the head, there's the other shoulder, so this is where I want to go along. I think that's how head and shoulders work. I'm not truly, I haven't thought about them so long, it doesn't really matter, but that's not really a safe trade. You want to wait until the market shows you that it's going higher, which would be up like this, so the next shoulder is higher than the last one, and then the safe place to enter is down here. And this is actually called a Quasimodo, because it's a head and shoulders of one one shoulder offset the other, right? So, and I can show in charts such as oil. Actually, the recent swing high of oil was exactly one of these. I mean, it was precisely one of these. The market gets here, it has to make a decision there to go higher or lower. It goes lower, comes back up, and each time it comes back to these points, it has to decide something. And you can find, if you go in the smaller time frames, small decisions are made. You'll see it just kind of sit there and consolidate and then ping off one way or the other. Yeah, and that's a lot of the time how price moves. So the important points are the breaks, the failures to go in that same direction after the break, or back the way it came, if you like, after the break, and the returns to those points. And that's kind of how it is. This drop I've shown here, this is the zigzag pattern with each of these points will still have sell orders sat within them. However, what can happen, and this is a different way that price moves, it looks like this, but it's distinctly different if you know what you're looking for, and it goes like this kind of thing, which on the face of it looks the same, but it's not actually. So what's happening, the difference here is that unlike this one where it drops and drops and drops, in this case it's revisiting the peak in each time, the swing high. So it drops up here, drops up here, drops up here, drops, maybe it comes again, and it drops again. And what's happening is that any sell orders that were here, 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 no longer exist. So there's no sell orders there. So when price comes back to this area, it's very, very easy for it to cut straight through again from the last set of sell orders, which were here, all through this, which is basically empty space, and back up to there again. And you might hear me call that compression or compressed spring or whatever else. And of course this works absolutely the same upwards and downwards. Those are the main ways that the markets move.